So this is really the first time ever I've really had to experience, I believe, the ugly side of YouTube. Okay, so if you were subscribed this week, first of all, congratulations if you were subscribed and you believed in everything that I was saying this week, because this week, very early on, somewhere around Tuesday and Wednesday, right, we saw this drop. This is where we said they're setting up a bear trap, and this could be a prolonged bear trap. We don't know how, it could be a bear trap on a 15, a 30, a 50, you know, they've been trapping us back and forth a lot this month, okay? And I saw signals down in these areas that said there was going to be a trap. And then this day right here caused me some emotional turmoil, I'm not gonna lie. I got a lot of hate mail. I literally got emails that said I should delete my channel. I have no idea what I'm talking about. I'm crazy. I was getting comments. I was getting unsubscribers because I was saying that this is a big bear trap and that the media is lying to you. The media was telling you that the yields needed to go up, and that's why we were selling off. And that was just a blatant lie. The dollar was going down while the market went down. We went through all this. We're going to go through all that in a moment as we get into some technical analysis for the SPY Qs, Apple, Tesla, Amazon, Nvidia, AMD, and Meta going forward. And we're going to look at AMC and GME and a few things today. We're going to look at things on some bigger time frames to see what's going on. But we called this out as a trap. I got a bunch of hate for it, and that's perfectly fine. I took it on the chin. Someone came live again right here and said, "Do you still believe this is a trap?" And I said yes, and actually that's a nice way to put it. They actually said, "Ha ha ha, you think this is a trap." And then look at that. So I'm going to tell you exactly how we were able to find this first off, and then we're going to get into that technical analysis. Let's get into it. And first of all, thank you so much to my subscribers out there who held true. Thank you so much for anyone who came back and apologized after talking badly. There were some people who came back and apologized, and I really do appreciate that because I was paying attention to the signals. I told you this market is rigged, and this is a very rigged move. So we're going to talk about it today as we get into that technical analysis. So thank you so much if you are subscribed and part of the Patreon and really believed in the words that I'm saying, and you paid attention to the signals as well. It truly means that you're learning, and you're learning fast if you're paying attention to the same signals as me and you're able to understand it. So I appreciate it. Thank you guys so much, and let's get into some analysis here. When this happened, I had a lot of friends and family telling me to throw it in your face. That's not who I am. They said to throw it in those people who talked badly about you's face. No, you are still welcome here. There's nothing wrong with you taking a position and believing in something, but I would highly encourage you to pay attention to the actual signals because that's exactly what we did all week, and we weren't fooled. Okay, so first of all, even this bounce right here, yes, it said, hey, potential for upside, but the next bar told you no potential for upside, and then we see the big downturn. You got a hint with this bar right here. As far as our risk management in the course, it would tell you do not take an upward position right here. And then we see that breakdown. So we should not have been torn up by this if we were being risk managed. If you need some help on that risk management, the course is only $100 this weekend. So go snag it and dedicate yourself to some learning. So why did we catch this? Why did we think that this was happening? Well, one, they were lying to you. Well, let's go over the signals kind of backwards. Well, one, the dollar. The dollar was dropping while the market was dropping. So this told me that there was insiders buying. It's the opposite signal that we talked about over here where we caught that drop. This is insiders selling because the market and the dollar are going up at the same time. This is insiders buying because the dollar is going down dramatically while the market is going down dramatically. So that's how we read into that. Now, that's not the only piece of data. You can't just go based on one thing. But then we noticed the media was being kind of fishy because we said up in this area, we were talking about what could happen with the data. And if the data came out and GDP was lower and the jobs data came out as such, then we would see the yield drop off. And that's exactly what happened. The GDP came in lower, the yield dropped off, right? Actually, I think the GDP came out around this time right here and it dropped off. And I said, that's a great thing for the market. Like, people are going to see that as good news. Now, it's not necessarily a good thing for the economy, but the market and the economy are two different things right now. So bad news is technically good news still because we're talking about inflation. So GDP came in lower, which means slowing in growth. Slowing in growth means this is going to come down. The 10-year yield will come down. Okay, so that's what we have to know about there. It means slowing in inflation, and that is going to come down. The media during this time was telling you that the market was going down because now you have scares of the 10-year going up. There is nothing that was true about that. And we pointed that out live during our live show. We said there is nothing that is true about that. and we have the dollar going down dramatically while the market goes down. This is some kind of bear trap. And we got one, and we built even more and got a bigger bear trap. Now, what was the main signal that tipped us off that there was going to be some kind of recovery? That was XLU. We've been following utilities. This is our crash indicator. We're going to talk about this as we get into the regular analysis, but right now we're just talking about what happened on Friday. XLU was V-shaping recovery while the market kept falling, right? So from this point on, the market was going down. And this is where even live I said, yeah, we could make some form, right, to go up. But if we're going to do what XLU did, because we follow XLU right now, this is our crash signal. So we pointed out in our video on YouTube, which people called me crazy. I said, if we are crashing soon, then shouldn't our crash signal be crashing? And it wasn't. So it was V-shaped recovering. And so when we actually headed to lower levels, and then by the end of the day, what did we get? What did we get? We got a V-shaped recovery out of the SPY. And we're about at this point right here. So we're paying attention to XLU, and that really, really helped us out. Now, what is the actual crash signal? We know that we got that V-shaped recovery in the SPY. So what is the actual crash signal? The actual crash signal is when you see a divergence here. Okay, the last 2 to 3 times we've seen a divergence here. So now we're getting into those bigger time frames. Here you go. XLU. If we see an upward move and see that drop off, the SPY might catch up to that and make that same signal later. If we see this signal, that is a crash signal. This right here. You see, it's on the MACD, it's on the RSI at the same time. So this is the crash signal you really want to be paying attention to in the next few weeks. And this is why I said, and I put out a video mentioning this and said there is going to be a crash in the next 30 days. But we quickly have been saying, if you paid attention to the video, there is first usually a pullback, then another push upward to create some kind of double top or some kind of divergence. Where are we at with the SPY right now? Okay, let's delete all this off and let's go check out where we are at with the SPY. I'll clean the rest of that up later. Here you go, the SPY. Where are we at right now? Well, we crossed over down on the MACD. We've gotten a pullback. We got the trap. There's the trap. And XLU is making the same move here. And now we're above all the moving averages. So what can happen here? Well, what if we go create that divergence? We get a lot of data this week. So this week is going to be very important, and we very well could set up the major top this week. Now, this market is very, very weird, right? It's been very, very rigged. It's been very manipulated. Nvidia has been very manipulated, but I think Nvidia is going to top out. And I think that that is the real bag holder right there. I think that that is the real bag hold. They want the retail to buy that while the insiders sell it. And people told me I was crazy for saying insiders were selling Nvidia, and then Nvidia pulls back this week on news that an insider was selling Nvidia. Like this, we're just paying attention to things correctly, and we're not following what they want us to hear. We're doing our own research. Your own research is going to be better than the research that CNBC, Bloomberg, all these people are giving you right now. Okay, do your own research, because if you can pay attention to these signals, what could happen here? Well, what if we set up this signal right here at the same time as XLU? That's very important. It has to happen at the same time. And we have to understand that maybe it's going to play out differently this time. What if this is some kind of divergence and that pulls way down again, and then we get a double top over here? This is where things that we pay attention to in the course. How to not get screwed. We know the market is rigged. This is how you can not get screwed. Now, the big deal here is if we're going to experience a major top, I want you to zoom out to a monthly scale and just see how the monthly is set up here. We've talked about this before. This is the time. This is the month. You really have to start paying attention to big signals like this. If we see that crash signal on the daily scale, I would highly encourage you to see if we're able to cross over on this MACD on a monthly scale, because where are we? We're close to negative territory. What is true for a 15-minute chart is true for a monthly chart, okay? It doesn't mean we can't see some kind of pullback, go back up and make a triple divergence, right? We have to cross that center line and go negative. That would be your crash scenario, okay? So really pay attention. We're going to pay attention to these things for you. We're going to be updating you on it, but I would like you to get used to doing your own research. This channel is about learning. And so learn how to do your own research, and that would be paying attention to these signals. Now, what would this do for the weekly scale? Well, what if we go up for a couple weeks? What if it takes a little bit longer to form? Well, we would see a weekly divergence. As of right now, what are we getting? Rejection. We weren't able to cross back up this week. We're kind of getting an inverted hammer. So we'll see if we're able to push higher, end the week higher. That might cross this MACD, and then the very next week, everything's ripped away. So we're paying attention to these signals here. And if we do that, we can catch things like this. A daily divergence, quick right here, right? It has divergences across the way as well, right? We can look all the way across. We have divergences all the way across this. We have a monthly divergence that is formed. It is not confirmed. But if we are going to see the crash, you are going to see XLU and the SPY create that divergence, and then we are going to see some dramatic fall. Does that mean take a trade? No, not necessarily. You have to have more than that. That's why we have the course out there. You have to know how to take a position, when to take a position, and know about these indicators, know how to stay away from getting screwed. That's the last video we updated. It is down in the very important additional content section at the bottom. If you take that, you're going to immediately, if you take that and you have a basic understanding of the MACD and RSI, you are going to be better than probably 75% of traders. Okay, so let's switch over to the Qs real quick and see what we're seeing. Well, we're seeing a cross down on the MACD as of now, so calls might be limited. I'm not saying even the Qs here have the chance, and we're going to go into 2-hour charts on Sunday, so make sure you're subscribed because 2-hour charts are looking pretty important too. But I do not like to take calls on a stock. It's one of my rules that I mention all the time. I do not like to take calls on a stock that is crossed over on its MACD to the downside. Same goes with the other side, right? I don't take shorts on a stock that is crossed up on its MACD to the upside because daily momentum can take over, right? The job's not finished. We haven't confirmed a lot of things. That's why it's important to come back for Sunday's video and make sure that we're doing the thing to confirm more upside here on the SPY and the Qs. But right now, XLU already confirmed that, so I highly assume with this rigged move that the Qs and the SPY are going to do the same. Now, the signal that you're paying attention to, the Qs do not have to make this. The Qs do not have to make this divergence. Okay, I wanted to point that out. I think that's very important. Now, it can, and I think it will, but we could get some kind of lower high out of the Qs. Okay, so just pay attention to that going forward. But what do we notice? We do have the divergences all across the way. What do we notice about the weekly scale? Here we go. It up here has the same potential this week to create a weekly divergence. You'd have weekly triple divergence on the Qs. The Qs have the potential to actually have more weakness, according to the momentum, than the SPY. So that is something to keep in mind. The Qs have more weakness in momentum than the SPY. It has a triple divergence across the way here on a weekly scale. If it can pop up right now, trying to reject. So we'll see if that rejects again this week. But that would technically be a triple divergence on the RSI, just not on the MACD, I would say at the same time. You'd have a rejection, but a lot of technical analysis people, they believe that rejections are stronger. I'm not necessarily in that belief, but in this case, I very well might be. I think the Qs are going to suffer a lot more than the SPY. Now, if we look at the monthly, what do we see? A similar signal. The monthly is showing divergence up here. Okay, divergence between these highs at the same time on the MACD and RSI. So if this is able to cross, very important, it first has to cross. Then on the monthly scale, you are still in positive territory. So at this point, you are still contrarian. You are contrarian bearish here because you are in a positive trend. It isn't until we actually cross that center line that really bad things happen. Now, I can tell you that if this does escalate and cross and we see XLU just continue to fall, then I assume that the Qs and the SPY will be following XLU, but there will be traps along the way. This is a much harder market to trade in. You've probably experienced that in the month of May, and here we go. A lot of people coming out and saying to me, hey, how did sell in May and go away work for you? Well, if all this plays out, then sell in May, let's see, 449, sell at 449. What if in a year's time or even in the next couple of months, we're down in this area? We're down at 380. I would say that that was a pretty good play there. Sell in May and go away could have actually worked in the grand scheme of things. You're just trading shorter time frames. On the monthly scale, this looks ugly. Okay, so we have a lot of reversal signals popping up for the Qs, and we're talking about those things today. So now we're going to get into the individual stocks. For the individual stocks, you did see those yellow lines on the Qs and the SPY. We're going to be updating the monthly ranges on Sunday. So that's part of the Patreon. You not only get a weekly video with some trade setups, which we gave IWM this week, and it played out very well. But most of the time, I'm only giving very probable trades, okay? Very probable trades. But right now, what are we noticing? With those monthly expected moves, we're kind of landing in and out of them. Okay, so we're going to get some new monthly expected moves going out on Patreon, and you'll get those weekly expected moves as well. Okay, so what are we paying attention to with Apple here? Well, on the monthly, it looks pretty good, but Apple was the one that we were mentioning a long time ago. We were talking about it back here, actually, around September, and then we found that bottom. We found on the daily scale that triple divergence, and this is where we called the bottom in October, and then we see that bounce up. Now we have crossed on the monthly momentum, so technically the momentum is down but in a positive trend, okay? It's down in a positive trend. So this would tell you this is a pullback as of right now. If we're able to cross up, maybe the craziness continues. Okay, don't take that off the table. It still can do that, but as far as it goes, it is still pointing down and it has not crossed. So we do still have potential that this is just some kind of retest of the structure, and then we're going to see this start to drop down. We're talking about this on the shorter time frames on Sunday. Okay, so come back for Sunday. Now, what are we noticing here about the weekly chart? The weekly chart, this is the point right here where we said there was probably going to be some kind of pullback right around this bar right here. It confirmed on the MACD. We were never able to cross back up, and we see that pullback. And then around here, we were saying, hey, you got some good divergences for a pop. We've been reading Apple very, very well. This is a stock that people ask, what's the stock that I trade the most? It's Apple. Apple is the stock that I've taken the most trades on. I understand it very, very well. And therefore, what am I paying attention to as someone who has traded Apple a ton? Well, this reminds me of Tesla a few months ago. Okay, Tesla a few months ago popped up into positive territory on a weekly scale, and I said, hey, watch out if that rolls over, because negative territory is right there. Apple might go through some major pain soon, and that could mean that the whole market is going through some major pain. This is a huge, huge stock. Okay, huge stock. Now, this is still positive. You need that to roll over. But if we're going to reject anywhere up in these areas and see that XLU signal, I'd pay attention if this weekly is crossing over. You might have something more ugly happening in front of you, some kind of negative trend on the weekly scale. That's very important. Now, on the daily, what are we noticing here? It's trying to curl up on this MACD. Maybe it does that early on in the week next week. And this is where those weekly expected moves will really help. I mean, what if on this bar right here, the weekly expected move is right here? What if the weekly expected move is somewhere around 195.94? Well, if we pop up to that very early on in the week, 68% chance for a drop. So there could be one trap to the upside left. We've had a very trappy market. They are most likely going to trap you to the upside, and we're going to see this rug pulled very, very soon. Very, very soon. And we're open to being wrong. We're just paying attention to the signals. The signals right now say, hey, if I'm reading into the future a tiny bit, this is what could form. And if it does, we're going to have a significant drop. It is very good as a trader to more so look into the slight future than try to. It's good to look in the future, create a plan, create those scenarios, and whichever one actually is playing out in front of you, you just want to react. And that's all we're doing on this channel. Is we're formulating those scenarios, we're helping you pay attention to those signals, we're teaching you about this technical analysis so that you are aware of things like this. Apple, if it gets one pop up, you might get a tiny daily divergence down here. You pretty much almost have a double top right now, but you'll notice this is the signal that we last called out. You're looking for something similar to this, just a little bit tighter. Look at that divergence right before earnings, and we don't trade around earnings, but boom, you can play the signals after earnings. We noticed a pullback and then the shorter time frame. So we'll get into that on Sunday. But Apple here, I think you got a good shot to head a little bit higher and then pull back. As far as the daily scale goes, once we look at the shorter time frames, we can have a different take. So come back on Sunday. Tesla on the weekly, this is where it is similar to Apple on the weekly right now. Apple looks like this right now, right? Tesla sees a breakdown with divergence, confirms right here, downside potential is there, and then we get some kind of bounce. And what does that do? It crosses us up. We could have went positive here. This could have been a very positive move for Tesla, but your signals told you on this week right here, hey, watch out, because we are very close to the center line and we could cross over and go into a negative trend, which means bad things for Tesla. Bad things for Tesla. That's very bad. This is negative. Okay, so this right here is where Apple is. And what if Apple just rolls over that MACD? Well, it could behave like Tesla, and look at Tesla. So Apple, if it's going to make any kind of move like Tesla, we'll say from the crossing over, it could experience something like a 40% drop. Okay, now that's comparing two different stocks. You have to actually look at the signals, but this is just the example here of where Apple is at. So Tesla right around this area, we were saying watch out because it could go negative. It did. It broke through this very important trend here, and now we saw that break down. We saw some divergences down here. We get a pop. Some people were able to make good money off this. I'm very glad you were. We were paying attention to the signals tightly, but this is very hard to trade right now. Tesla is one of the hardest ones to trade right now. So I've been saying that this whole week. I'm like, Tesla looks the most wonky. Okay, so on the daily scale, what do we want to pay attention to? Well, as of right now, we are crossed over on the MACD very close to the center line, right? We're not too far away. We're just like 2 down days away from going negative. So we have to pay attention to it. Now, when we get into the shorter time frames, there is potential for one more push higher. That's where we will pay attention to our weekly expected moves, maybe finding some kind of 2-hour divergence in this area. We'll talk about that on Sunday. But right now, you just have to say, you know, we have to talk a little positively about Tesla because it's in positive territory. But right now, we can be a contrarian bear and say there's at least some kind of pullback that leads to an upside in the future. Okay, we'll pay attention to this on Sunday. But Tesla, very close to the center line. If that curls over, we may very well see some negative price action again. And maybe Tesla wants to go a little bit deeper into our buy zone, which worked out very well in the past, by the way. So now Amazon's a good example of why you have to be risk managed. Okay, now Amazon was giving major weakness signals here, right? We have a bunch of divergences and a double top. We have a bunch of divergences, double top. We have a bunch of divergences on the RSI at the same time and double top. Okay, this is a very big signal for weakness in momentum, and that is something to pay attention to. And what are we seeing since that signal was proven? Downside. Now, this does look slightly controlled, but it kind of got uncontrolled. So in the shorter time frames, we actually saw the trade setup here. But if we were being risk managed, we shouldn't be caught up in any of this right now. So that's where the risk management really helps you out. That is down in the description, the course down in the description. You can learn about your risk management and learn about how to not get screwed because this market is rigged. There's literally a video in the bottom that says how to not get screwed, and it'll tell you exactly how to get out of a position when you know something funky could be happening. It tells you how to get out of a losing position before another big upward move happens and you lose all of it. Remember, losing 20% is fine. Losing 100% is way worse than losing 20%. In fact, we say on our channel, if you lose 20% and that move was a rigged move and it was a trap and you weren't able to let them take all your money, you should be just as excited about that as taking a winning trade. You really should. Now, what do we want to pay attention to for Amazon in the weekly scale is going to be this right here. So this right here, if we're going to see some dramatic upside, if this is never able to confirm higher over the next 2 weeks, that could mean this is some kind of pop and then drop. I still am leaning towards a lower high for Amazon here. Okay, I'm still leaning towards a lower high. Now, Amazon's a little bit different than the other ones. Look at this. No real divergence. You got divergence on the RSI up at these levels, but no real divergence across the way. This might be a manipulated stock. It might just be retail's overexcited with it. I don't know what it could be, but it's far away from the center line. So we're going to talk about it a little bit differently. If this curls down and curls back up, then maybe we go make that divergence in the future. And this is where we'll pay attention to XLU and the SPY and see if the signals are actually proving that that crash is playing out. Okay, we still have to pay attention. It's not just you see a crash signal, so therefore it has to happen. Everything is a probability in the stock market. Nothing is 100%. Okay, so we're paying attention to this. I think that Amazon has the chance for a lower high. Very important to come back on Sunday for Amazon because the weekly scale isn't cutting it. The daily scale really isn't cutting it. We have to pay attention to the 30-minute and the 2-hour. Now it's time to get into the most manipulated stock in the market. This is the most manipulated stock in the market, maybe right beside GME and AMC. And yes, that stuff is really happening. If you don't believe GME and AMC, the short thing isn't really happening, it is. And they're using Nvidia to pay for it. They're using these rigged moves like they did on Friday to pay to suppress those stocks. And I think we're about to see some kind of fake pump from GME and AMC very soon. That could happen in June, guys, so it could happen pretty quickly. But what are we paying attention to with Nvidia? Well, the rigged stock, eventually they will rug pull it and take profit from all the retail traders right when they are overexcited to the upside. Right when they all take calls to the upside, the retail traders, they are going to rug pull it. And this is the signal where that will happen. A weekly divergence here is forming. And I still believe Nvidia might even go make a new all-time high, get everyone even more excited. And then maybe even by Friday this week, that rug is pulled. So we are going to be paying attention to this. Remember, this has not confirmed yet, but you do have divergence on the MACD, on the RSI at the same time. And the RSI is pretty significant. The MACD, not so much. So if we're going to see that pull back, we'll talk about this in the future. But as of right now, it looks like we are seeing momentum die out to the upside, and we could see at least some kind of bigger pullback. Bigger pullback right now is overall the assessment because what? We are far away from the center line, and this is one of the most rigged stocks in the market right now. We know it is rigged. We know that Citadel has come out and they told us straight up on TV that they hired rocket scientists in order to create their new algorithm that controls their market making behavior. And what did I notice this week? We talked about it a lot live. All of my options were very funky during this whole week, and therefore we would know they're doing something weird, and it happens to be happening right as some weird stuff is happening across the board, right? GME and AMC, Donald Trump getting convicted or whatever. It's like all of those things just tell you that more than the stock market are rigged, first of all. That's what you need to know. Usually if one thing is rigged, then all of it is rigged. So the stock market is rigged, and most likely we're seeing rigged things across our whole country. And at this point, boom, there's the signal you pay attention to. If this confirms, you're going to see some probably dramatic downside. That still could be a pullback because we are far away from the center line. I just wanted to make that very clear about Nvidia. Now, on the daily scale for Nvidia, what are we noticing? Well, this is going to be a big hint. This is going to be a big hint when this confirms. When this confirms, we have a very high potential of that weekly divergence confirming, and I think it's going to maybe even happen this week, guys. So going into this week, you have to really be on your toes. It could extend for some time, right? We're going to pay attention to those signals, but we are people who are just in case. There's nothing wrong with being a just in case kind of person. Someone who says, if this confirms, we have a high probability of seeing something more dramatic. If that turns around, okay, that's not the moment. I just was at the wrong timing, and this is the moment. They are going to make the market do crazy market things in order to trap people however they can until everyone retail side, most of retail side is baited into it, and then they're going to rip it away. And I believe Nvidia will be ripped away, and I think Nvidia will be down towards $400 to $500 in the next 1 to 5 years. Talking about AMD, you notice this about AMD on the daily scale. It is very, very close to the center line. Okay, so it's very, very close to the center line. So if this is going to see some kind of drop, well, that could very well cross over the MACD. And the funny thing about crossing over this MACD, if you cross over that MACD, you're already negative for AMD. AMD could end up over the next few months going down to 133.70. It could go all the way down to retest this trend line. It could go into our other buy zone, right, which is down here. It could go down towards something like 120. So there is weakness here, and it is because you are still close to that center line. Now, this is still positive. So we're talking, we have to say positive for now. But if we start to see little 2-hour signals in here, we can say that can roll over the daily. And where is the daily? It's right by negative territory. So I believe some negativity is coming for AMD very, very soon. If the signals remain bullish, though, then we have to remain bullish on it. Now, we're not going to talk about the 2-hour today, but we're going to show you that 2-hour signal that could form. Okay, now what are we paying attention to here? Well, if they are going to manipulate a different stock, what if AMD catches a huge bid for the next few weeks? What if it catches a huge bid? Because this weekly did get its pullback. It's right by, it's kind of close to the center line. Not right by it, but kind of close to the center line. If that can turn up for a few weeks and then turn back down, maybe this is more prolonged than we think, right? Maybe we create some kind of divergence up here for a double top for AMD. You have to be open to multiple scenarios. I'm telling you right now, it will really help you out as a trader. It helped us out this week, and we proved that on Friday Live. I even told you, I'm going to go live if I see something set up. And I even came live right away and I said, I just put my money where my mouth is. I took a play on volatility. I think this is some kind of trap. I'm going to take a play on this. And by the end of the day, I was very, very fucking green. It's very, very nice when you're right, when everyone's hating on you on the internet. I'm going to tell you that right now. So thank you guys for watching, and thank you guys so much for subscribing. It's awesome to see you guys here learning on the weekend. We still got some more stuff to get into. Another one that could pump higher for a few weeks, right? It's still in positive territory. We have seen a decent pullback. If this crosses up at any time, it means positivity, and that's not going to be the moment. So we're paying attention closely to that crash signal because we have some that are just looking like they've pulled back. Now, what's the thing that is similar about AMD and Meta at this point? Even worse for Meta at this point. If Meta sees some kind of upward push, we talked about 453.08. We said if you do not lose 453.08, then it's perfectly fine. And this might be where they want to trap you. That's exactly what ended up happening. They hold up right above that. Let's see the low here. 454.46, just above 453.08. So we're marking this off pretty well here. Now we're seeing that buyback up. If we can see some kind of upward push, we're going to look at the 2-hour charts on Sunday. That'll really help us out to see weakness. If we see weakness and momentum on a 2-hour chart, those really like to roll over the daily. And where is the daily for Meta? It's already negative. So we actually should be still talking about Meta negatively here. It is a contrarian signal right now to be bullish on Meta. Now, in the 2-hour, you might say that's going positive. Okay, then you can be bullish on a 2-hour. But the daily side, you would say it's still bearish right now because it is in a negative trend. It is a contrarian bullish signal as of right now. If that just rolls over on the daily, it might be game over. If you lose 453.08, well, what can you do if you cross over into negative territory on the MACD? Well, you can test these lows, or you can go make a new one. We might be beelining for this 200 very soon. So be careful out there with Meta. We are going to talk about the opposite side of Nvidia. The most rigged stocks right now are Nvidia, AMC, and GME. And I want you to notice how all those other stocks that are seeing those short selling come in and seeing those short sellers have to buy it back, they're seeing pops. They're seeing pops, but AMC and GME are still suppressed, which tells me these are the big dogs. These are the ones they are the most worried about because they're reacting last. The last one might pay the most. But what are we noticing on the daily scale? This is not dead. This is a pullback. We said this around here, 437, very important. Now they're trying to hold below that level. I believe that is where they can still maybe make money out of AMC over time. But if this just holds above there for a little bit, or maybe I'm wrong and they need to drop this even further down, we'll pay attention. But as of right now, your daily is positive. You are a contrarian bear if you're bearish on AMC on a daily scale. You're a contrarian right now. This is a bullish trend still. You are not below the center line. Once that crosses below the center line, we can talk. We can say, yeah, this is rolling negative. Now we are a bear on AMC. But right now, I'm still bullish on AMC because the only thing I could be is a contrarian bear. This is a bullish trend right now on the daily scale. We're going to go into these shorter time frames on AMC and GME on Sunday. Let's look at the weekly scale. I haven't looked at this, but what are we noticing? It's creeping closer and closer to the center line. Now, on the weekly scale, this does not look the best, but we know this is manipulated, so I'm not expecting this to look fantastic. But if we're going to see some kind of pop and drop again, like we did over here, what if we get some kind of fake pump up that gets close to the center line but doesn't cross, and then we see that cross down for a few weeks? That might mean that the moment for AMC and GME might be in the future. What if this sees a big pop, tries to go positive, but fades throughout the week, and then we see that turn back down? That would just tell us this isn't the moment. Maybe this one is with some kind of divergence on the weekly scale. Okay, that would be a good sign of momentum dying out, and I believe that that would be the most probable moment. But we do still have the opportunity because the daily's in a daily trend, we have the opportunity for a big move in the next month. We do. We have the opportunity for a big move in June. That is very, very true. You're still in a bullish trend on the daily scale. Now, right now, you're in a contrarian bear point of that. You're in a pullback point of that. But it doesn't mean that you can be overly bearish on the stock. Once the stock goes negative, that's where it is. Right now, you have to talk negatively about the weekly scale. Therefore, I think we have the chance for some kind of pop that then fades. And then people are convinced, oh, AMC is dead. And right when they're convinced it's dead, the people who hold might benefit the most. So I am holding AMC, and I will continue to hold AMC because I know what the movement is about. I am fine with losing my $2,500, $3,000. That's how much I risked in. I still have a family to take care of, so that is all I'm risking right now. I highly encourage you to only risk an amount of money that you are willing to lose, right? That's with any trade. That is something to learn about there. Pretty much in any trading, you shouldn't be trading if the money that you could lose would be affecting your life. Okay, so that's what I'm doing. I'm using an amount of money that would not affect me in any way. Here is why I think that we could see that big pop for GME, and maybe AMC happens later on because GME actually has that signal. Now, these react in tandem, so the thing with GME is you have a quadruple, you have big divergences all across down here on the MACD, and you actually have a very solid divergence. The main one I want to talk about is this very solid one on the weekly scale right here. This is divergence at the same time on the MACD and the RSI. What do we always say on this channel? MACD, RSI divergence. Okay, boom, boom. This is the actual moment where you should have bought, right? This is our buy area according to our strategies on the course, right? So this here told us there could be a big pop. Now we know the stock is manipulated. We got to trade those shorter time frames, and now we're getting slightly overbought. So what if this makes another pop higher? It is positive, pointing up, green bars on the histogram still on the weekly scale. Very, very bullish for GME. Very, very bullish for GME on the weekly scale. Now, the daily, currently, we're bullish, but we're contrarian bearish. This is a pullback as of right now. If you want GME to be dead, don't believe anyone that says it is dead as long as this daily isn't crossing the center line. Until that crosses the center line, then you have to say this is still a bullish trend. It's just like Nvidia. It's still a bullish trend, okay, on the daily scale. If this curls down and crosses that center line, that is when it becomes bearish. But if that curls back up at any time, well, that might very well be the moment. And we're actually seeing some things in the shorter time frames that say it could happen in the next 5 trading days. We're going to do the dollar and then volatility, and then I'm going to head out and have a nice weekend spending time with my family. I encourage you to do the same. If you're dedicating yourself to learning, taking the course this weekend, I really do appreciate it. I've answered some emails this morning with some good questions about the course. So hopefully you guys know that dedicating yourself to learning over the weekend, I truly respect you for it. Now, I want you to notice this about the dollar. It wasn't able to curl up right here, but I think we're going to see a moment where the dollar might be going up while the stock market goes up this week. And we're going to pay attention to that. It's really helped us out. The dollar was going up while the stock market was going up right here. And therefore, we were like, uh-oh, this is probably a trap. It was a trap. Then the dollar goes down while the market's going down. We go, uh-oh, that's a trap. And everyone called me crazy, and we were right. But once this curls up, just note this. A lot of the time, the dollar bottoms, solid bottoms, before the market does. So the market can still head higher as the dollar heads higher. It's once it crosses into positive territory that we're most likely going to see us start selling off. So I think we have a couple days where we could see this week even some kind of move in the dollar up while the stock market comes up, and that's going to be a huge hint for us, okay? So just pay attention to this. The dollar very close to going positive here. That means that the correct correlation with the market could take over, where the dollar goes up and stocks go down. Volatility was another reason in the shorter time frames that I played a volatility play. I said volatility is going to drop off dramatically. I'm not the biggest fan of taking plays in the SPY. Kind of wish I did. I mean, I would have made more money with the SPY, but the volatility dropped off dramatically, and I benefited from that. I stuck to my strategy. I paid attention to the signals. I didn't doubt myself. I knew that I was paying attention to things very correctly. That's why anyone that came in on Friday, you even noticed the video where we were going down, I changed the title to, "We were right, this is a bear trap," and the market continued to go down, and I got a bunch of hate, and I said, I do not care. You can be bearish if you want to. This is a trap. It's just taking a little longer to form. I just knew it was a trap. And sure, even my gut was like, maybe I am wrong. You're always going to have a piece of you that thinks you're wrong, but I trusted my signals, and that's really helped me out, and that's what I'm encouraging you to do. Just let the signals make the trades for you. You just click the buttons at the right times and make sure you're managing your risk. Your signals are going to tell you when to get in and when to get out. Now, what are we noticing here? Dramatic drop-off. What were we talking about all week? If this is going to be a crash, we have to be closing above the 200, above the 50, and the 50 has to be crossing the 200. But that wasn't happening. That wasn't happening. We went up and we tested it and it fell off. Just like over here, when we came back below, we said this isn't the crash. Why? We're going to short squeeze. This right here is where we called the short squeeze. And right here, we said, yeah, we're not closing above the 200 or the 50, so therefore, we're most likely going to see this drop off. And we're seeing all the other signals at the same time. So what do I think could happen here? Well, when you want to pay attention to the VIX, a lot of people ask me, how do you do technical analysis on the VIX? Technical analysis on the VIX doesn't always work the right way. But when everything lines up at the same time, that's when you really want to pay attention, okay? We just talked about how the SPY and XLU could go make some kind of divergence to the upside. So what do I want to be paying attention to? I want to see if the volatility can make that same signal at the same time. So what if volatility drops off for a few days, crosses briefly on this MACD, and we see a little divergence here? Okay, we see a little divergence. Now, the other way to think about this is, what if volatility is able to hold up a little bit better? We see some kind of downturn and then that curls right back up. That's where we'll go into the shorter time frames. But if volatility is also able to hold up better than the SPY, because if the SPY is making a new high, you want volatility to be dropping off lower. If XLU is making a new high, creating a divergence, you really want volatility making that divergence. And that's a reversal signal. But it's an even better reversal signal if the VIX doesn't match that exactly and holds up better. That means even more potential, right? Like, think of it this way. If volatility went and made that divergence, how far is it away from getting to 16 or getting to 20? It's far, right? But if it makes it a little sooner, which one's closer? If the SPY goes and makes that new high or double top, the volatility will actually be closer to the 20 if it holds up a little bit better. So we're going to be paying attention to that signal this week. Make sure you're subscribed and you pay attention to Sunday's video as we go into the shorter time frames. One last note about volatility here is we were down by more than 10% on Friday. We were down by more than 10%, which tells me what? Well, volatility has a chance, an 85% chance for an up day in the next 2 trading sessions. That's something about volatility we mentioned in the course. You have an 85% chance when the volatility right here on Wednesday, volatility was up by 10.53%. That tells you the opposite. You have an 85% chance for a down day in volatility. Now you have the opposite of this signal right here, which is we were down by more than 10%. Therefore, in the next 2 trading sessions right in here, we have a chance for volatility to scale up again. Okay, so I'm really going to be paying attention on Monday and Tuesday, seeing if by the end of Tuesday we might see some kind of pop in volatility that makes it have a green day here. I think that would be very, very telling, and that would be some kind of higher low for the volatility here, maybe while the SPY is creating that divergence or some kind of double top. We will pay attention to that. We will notify you about that, and make sure to come back on Sunday because the shorter time frames are going to be very, very important here. So I believe the main takeaway for this video is we know the market is rigged, and therefore we have to pay attention if this signal is actually forming and confirming. Right now, you do not even have it crossed on the MACD, but we could be getting some kind of upward push, some kind of short squeeze in the market, some kind of squeeze in XLU that could create that divergence very quickly. And right when people think that the market can't fall down, that is when they're convinced to take all the calls and then they rug pull retail. And I don't want you to be one of those people. So first of all, we do need to make sure that this is actually forming. Okay, we have to make sure this double top or some kind of divergence up here is actually forming at the same time as the SPY. That will be our crash indication. If that doesn't form, then this isn't the moment. But we are informed. We are aware of this just in case. It will make you a better trader to be aware of these scenarios and then just react in real time to which one is happening in front of you. It will make you such a better trader. Remember out there, first of all, thank you so much for watching. I really do appreciate it. Thank you for taking the time out of your weekend to learn a little bit here with me and look at these signals with me. I do appreciate it. If you want to dedicate some more time to learning, the course is only $100 till Sunday. A lot of people live asking for me to extend the course, so by the live stream on Friday, I extended it to Sunday. If we are going to see this type of signal complete next week, then I will leave the course up for $100. But right now, just know that that is a good discount. It's $100 to see these signals the way I do, and it will really help you out with your trading. I'll even tell you in the risk management portion, how to not get screwed in this market by paying attention to your signals on the 30-minute, 2-hour, and the daily scale. We go through all of them. We do it for 40 minutes straight. It is great practice, and I encourage you, after you take the course, to practice a little bit more. So thank you guys for watching. I hope you have a great weekend. Nothing but love and happiness to your families for the weekend. Have a great weekend. We could be seeing something very bad happen, and so I encourage you to make sure that this weekend is a good one. Thank you for watching. Have a good weekend. Peace.